We are always preparing to protect our loved ones. Not always for what will happen, but for what could happen. With a life insurance cover that grows every year, you ensure that whatever comes your way, your loved ones are always protected. Introducing AIA Super Protector, the life insurance that helps you prepare to put your loved ones first. AIA Insurance.
Morning, bossa.
Morning, sana. Komo tatte?
UPay app එක නිසා වැඩේ නිකන් ක්‍රීම් බඩිස් වගේ නැගලා යනවා. ගිලන්න.
Right. Morning.
ආයිබෝන් සර්.
අයිබෝන්. බොමු තැමිලි ගෙඩිය.
බොමු.
හැම වෙලාවෙම මාරු සල්ලි අත ගන්න ඕනේ නෑ මාමේ. ස්මාර්ට් ෆෝන් එකකට අන්න අර වගේ ලංකා QR සපෝට් කරන UPay app එක දාගෙන ඒකෙන් ගනුදෙනු කරන්න.
ඕක පුරුද්දකට තියාගත්තාම වැඩෙත් ලේසි අපිත් ආරක්ෂිතයි.
470යි. අයියෝ මිස් මාරු සල්ලි නැද්ද?
ඒ ෆෝන් එකේ app 100ක් තිබුණත් වැඩක් නෑ. ලංකා QR කෝඩ් එක සපෝට් කරන UPay app එක නැත්තම්. කීයද බුදුලාලි ගාන?
435යි.
මැසේජ් එකක්.
හරි මත්තා සල්ලි ආව.
දෙන්න මිස් සල්ලි.
ආනෝනා.
මම UPay app එකෙන් පේ කරන්න.
හරි මරු.
Morning. සල්ලි ආවනේ.
හරි මිස් සල්ලි ආව මිස්.
අන්න කෙල්ලෝ.
Bye.
අන්න කෙල්ලෝ.
සානා.
Google Play Store හෝ Apple App Store හරහා UPay app එක නොමිලේ ඩවුන්ලෝඩ් කරගන්න.
CIMA qualification and CGMA designation has provided me with the edge to be successful in securing the current position with my employer.
The CIMA C-Suite program helped me bridge the gap between my existing knowledge with the latest trends in business and finance.
The CGMA designation had opened career doors for me. I got an opportunity thanks to the skills I learned from C-Suite program.
Through the CIMA C-Suite program, I learned how to be more strategic in my thinking at work. This has given me more confidence when making high-level decisions.
The CIMA C-Suite program shaped my critical thinking skills.
What makes a nation great? Is it the richness of its heritage, the beauty of its natural bounty, the state of its state-of-the-art, or is it the bonds that bind us? For decades, SLT Mobitel has been linking Sri Lankan lives and uniting the nation. Whatever the future may look like, we'll always be right here, connecting you to the things you care most about. SLT Mobitel, the connection.
We are lions. We bring hope where it's needed. Support causes that matter. change lives, change communities, change the world. Visit lionsclubs.org to learn more.
Good evening, everyone, and I warmly welcome each and every one of you to Money Matters 1.1. Does personal finance still work in our changing economy? Organized by Lions Club of Colombo host 306A1. This is the second episode of Money Matters Financial Inclusion and Literacy Capacity Development Program. So let me give you a very brief introduction about the Lions Clubs International. The Lions Club International is the largest service club organization in the world with more than 1.4 million members with 48,000 clubs, serving in 200 countries across the globe. Since 1917, Lions has strengthened the local communities through hands-on service and humanitarian projects, and we are focused on supporting vision, the environment, childhood cancer, hunger, diabetes, and other pressing humanitarian needs to help address some of the biggest challenges faced by humanity. So we, the Lions Club of Colombo host, is the oldest club in the country, and we have been serving the community for the past 62 years, and we have organized and supported service initiatives that go beyond the general norms. We established the first iBank in Sri Lanka, built water systems for villages and children's park in Colombo, conducted mobile cataract surgery, and organized policy and capacity development programs on social issues such as cyber exploitation and violence, and now the latest one being the financial inclusion and literacy. And also, let me give you a very briefing about the Money Matters, the entire program. So Money Matter program is a one-year-long capacity development project to optimize the financial literacy and inclusion. So phase one would include 8 online series of panel discussions on financial inclusion and literacy with the participation of multiple stakeholders such as regulators, Sri Lankan financial and insurance market participants, and international financial institutions and non-governmental organizations. And going beyond the phase two, which will be the outreach and the capacity development program for 50 low-income families to equip them with the required financial literacy capability. And this will be followed up by similar outreach programs in various parts of the country. So let me take this opportunity to introduce our sponsors, because no event is possible without the financial capability. So these are the pillar of strengths of this project who have been supporting us. Start off with PR Wire, which is a strategic communication partner, and CIMS Sri Lanka as a knowledge partner, AIA Insurance as an insurance partner, and SDB Bank as the banking partner, and finally the SLT Mobitel as the telecommunication partner. So before I actually start off the formal session, let me give you a bit of a house rules. So I would appreciate when the session is on progress, keep yourself muted all the time. And also, if you do have any colleagues who could not join through the Zoom link, so they can watch the session through Facebook as well. And also, you are permitted to ask questions. So please post your question towards the Q&A. We have dedicated person assigned to that. So post your question through the Q&A chat box. And also, most importantly, the ideas and the views expressed by the speakers may not necessarily reflect the official policy or the position of any other organization or the employers or their business entities. And also, any ideas or strategies discussed during the Money Matters 1.1 session should not be undertaken by any individual or any participants without prior consultation with a financial professional for the purpose of assessing whether the ideas or strategies that are discussed are suitable to you based on your own personal financial objectives, needs, and risk tolerance. Hence, the participants shall not be hold the Lions Club of Colombo host responsible. And lastly, in compliance with the club's information security policy, please note that the Lions Club of Colombo host shall not be exchanging or selling your email addresses, mobile numbers, or any of the personal data with any of our sponsors or donors or any form of a third party associated with the club. Yeah. So with that, let me give you a very quick introduction about our eminent panelists. So we have for Money Matters 1.1, we have 4 eminent speakers. So let me start off with Mrs. T.M.J.Y.P. Fernando, presently the Deputy Governor of Central Bank of Sri Lanka. And Mrs. Fernando counts over 30 years of services in the central bank in the areas of supervision and regulation of banks, foreign exchange management, and currency management. Mrs. Fernando has served as a director of bank supervision and the control of exchange and has played a vital role in contributing to the financial system stability by providing leadership to implement a strong regulatory framework for banks in line with international standards and the best practices. Prior to the appointment as Deputy Governor, Mrs. Fernando held positions of Assistant Governor and was in charge of the departments of bank supervision, currency, foreign exchange, and employees provident fund. And Mrs. Fernando is a holder of Master of Business Economics degree from University of Colombo and also possesses a Bachelor of Commerce degree from University of Sri Jayawardenepura. And our next panelist, Mr. Shiran Fernando, Chief Economist, Ceylon Chamber of Commerce. And Mr. Fernando as a Chief Economist at the Ceylon Chamber of Commerce. And he leads the Economic Intelligence Unit, which is the focal point of the Chamber for economic research and policy advocacy. He is engaged in providing policy-level support to the government to shape the national economic agenda. In his capacity as the Chief Economist of Ceylon Chamber of Commerce, he is part of several steering committees formed by the government to drive forward the economic agenda. Mr. Shiran Fernando, he holds a bachelor's in economics and finance from the University of Colombo, and also an associate member of the Chartered Institute of Management Accountants and Chartered Global Management Accountant. And also, he holds a postgraduate diploma in international relations from the Bandaranaike Center for International Studies, known for BCIS, and also an executive MBA from the Postgraduate Institute of Management, Sri Lanka. And next, we have Mrs. Manohari Gunawardena. Presently, she is a financial sector specialist for South Asia, representing Asian Development Bank. And Mrs. Gunawardena counts more than 32 years of experience in the banking and finance industry, specializing in treasury. Before joining NDB, Mrs. Gunawardena, she has held many positions, which includes non-executive director, equity partners, and senior vice president, corporate banking and treasury of DFCC, and head of treasury at National Development Bank, and also as a senior dealer at Standard Chartered Bank. And Mrs. Gunawardena is a graduate of University of Kelaniya with a Bachelor of Science, and also she holds an MBA from Postgraduate Institute of Management, PIM, Sri Lanka. And also, she possesses a Master of Arts, Financial Economics from University of Colombo. And our last panelist, which is none other than Mr. Dilshan Rodrigo, who is the Chief Operating Officer, Executive Director of Hatton National Bank. Mr. Rodrigo counts over 18 years of experience in the field of banking and presently providing administrative leadership to finance, credit, operations, risk management, banking services, compliance, and internal audit. He's overseeing the cross-functional teams involved in improving governance and compliance by serving in the several board and management committees in the bank. And also, Ms. Rodrigo serves in the councils of the Sri Lanka Institute of Directors and as the chairman, Policy Advocacy Committee of Asian Bankers Association, Taiwan, during 2011 and 12 and 2019 and 20. And also, he has served on local councils of CIMA, ACCA, and Risk Professional Forum. Mr. Fernando is a holder of MBA from University of Canfield, University of Canfield, UK, and also a fellow member of CIMA and ACCA UK accounting bodies. And finally, the moderator for today's session, I'm Asita Pinnaduwa, and I'm the president of the Lions Club of Colombo Host, and also the project chairperson of Money Matters, a one-year-long program. Presently, I'm attached to Nations Trust Bank as assistant vice president, private banking. Yeah. So with that, let me start off the session. So before rather than when we structure the program, instead of starting off with a opening remark, we thought of post a question to the audience, or rather two questions. So with that, we can build our conversation. So can we have the first question, so that it will appear on the screen? So you are free to pick the correct answer in your view. So for your easy reference, I will read it out for you. If you are enjoying an interest rate of 4% per annum on your savings account, and the present inflation rate is at 6% per year, after 1 year, what is the amount of goods and services that you could consume, or rather whether you'll be able to buy with the amount of money in this account? So we can spare about 15 seconds. All right, thank you very much. So we can end the poll and we can share the results. Yeah, so 86% of the audience have said they can consume less than today, and 14% said not sure. So we'll give you the correct answer at the end of the session. So can we move on to the next question, please? So second question, again, I will read it out for you. The value of 1 rupee against US dollar will depreciate by 3 rupees in 3 months. Assume that you buy imported raw materials monthly from a local dealer. So what would you do to get the best value for your money? So we have given 4 answers. Please feel free to pick the right answer, or rather the best possible answer in your view. I think we can't see, the audience can't see the question. Can we just please see the visibility of the question? Some of the audience can't see the question. Can you see the question now? Yes, now it's visible. Let's start answering the question. Still, I don't think the question is visible to the audience. Right. I think now we can see the questions, rather answers coming in. Right. So we can spare 15 seconds. Sorry about the technical glitch that we had. Yeah. So we get a diverse set of answers. Interesting. All right. Thank you very much for the answers. So we have a very diverse set of answers being given. So let me share the answers. So 72% of the audience think that they would purchase additional stocks of raw material now, and 4% says they will purchase the same amount of raw materials, and 16% says they would purchase less amount of raw materials, and 4% think stop purchasing raw materials for the next 3 months. So thank you very much for your answers, and we would give you the answers at the end of the session, or probably you will be able to figure it out after listening to our discussion. So thank you very much. Right. So let me give you a bit of a background of what we are going to discuss today. So if you look at Sri Lanka as a nation, so we are a middle income country with a GDP per capita of $3,800 US dollars, with a total population of 21.9 million, with a per capita income of 683,000 rupees, if not about roughly around $3,600 as per the Central Bank of Sri Lanka. So amid the COVID-19 pandemic, the Sri Lanka's economy contracted by negative 3.6% in 2020, the worst growth performance on record, as in the case in many countries fighting with the pandemic. However, Sri Lanka's first quarter in 2021, the GDP growth was 4.3%, while the inflation, which we call the NCPI, stands at 6.1%, while the benchmark one-year government treasury bill yielding at 5.28%. In the interim, the unemployment is ticking as high as 5.5. So these are some of the stats that I'm sure you'd have seen it. I'm sure you'd have seen it on the mainstream media, and also through the regulator and through various research forums. So as an individuals or other citizens, why we should pay attention to the economy and our personal finances. So what is this personal finance is about? So personal finance is all about meeting personal financial goals, whether it is having enough finance for short-term financial needs, planning for retirement, or saving for our children's education. And it all depends on how we manage our income and expenses and living requirements and individual goals and desires, and how we plan on fulfilling those needs with our personal financial constraints. So economics or the economy obviously affect our daily lives in both direct and in subtle ways. From an individual perspective, economics frame the many choices that we have in terms of expenditure on work, leisure, and consumption matters, and also how much we are able to save. Our expenses are also influenced by macroeconomic trends such as inflation, interest rates, and economic growth. To make the most out of our income and savings, it is important to become financially literate so that we can distinguish between good and bad financial advice and make smart and informed decisions when it comes to personal finances. So, ladies and gentlemen, to understand how the changes in the economy will impact our personal finances, I would like to now begin the Money Matters 1.1 does personal finances still work in our changing economy? So with that, I would like to commence the formal panel discussion. And I would like to direct the first question to Mr. Dilshan Rodrigo. Since we speak about the personal finance, so I would like to understand, you've been a career banker for over 3 decades. As a senior banker, in your view, Mr. Rodrigo, what is personal finance and why it is important to citizens? And is there any difference between saving and investing? Mr. Rodrigo, over to you.
Thank you, Asita. First of all, thank you for inviting me to this session. The 2 questions that you asked at the very beginning, very pertinent questions, good appetizers to the session, good thought provokers to the session. So basically, what is personal finance? Personal finance is really about, having financial independence. Every single citizen in a country is entitled to having financial independence, which is having the money, adequate money to do what they want to do. Money to live, money to save for a holiday, save for children's education, save for your future needs, and also money to invest in various ventures that can give you a bigger return. So personal financial planning is important to give you financial independence. Ultimately, your quality of life, your standing in society, and your dignity, is a function of the financial independence that you enjoy. So many people, use the word saving and investments interchangeably. So saving is about keeping some money for a rainy day. Now, today, that many businesses are impacted post-COVID. The tourism sector has not been operational for the last 2 years. Then there are also many other businesses who have, had to curtail their operations, revisit the way they work due to the prevailing environment today. So some of those businesses who have saved adequately are in a better position to be able to manage their financial resources more effectively and be able to, keep the business going until they can relaunch in a different manner. So for example, today, I can tell you a little example. I was in Unawatna a couple of weeks back with my family on holiday, and I met the resort owner that I was staying in, and the resort was still running, albeit in a smaller way. And the employees were very happy because they said, unlike most of the other resorts in this area, this resort is still operational and we are getting paid our salaries. So I spoke to the owner and I asked him, how is it possible for you to be able to do this? Is it through the earnings of the resort? He said, no, I am not generating any return, very little returns from the resort in the last 2 years. But I have now, started learning and started investing in the stock market. And through my earnings in the stock market in the last 2 years, I have been able to make equal or comparable returns to be able to sustain this business. So when the things get back to normal, I will be able to recommence my resort business. But until such time, I have been able to tide things over in this manner. So one of the biggest challenges when it comes to saving is that, you're saving for a rainy day, you're keeping your money for a shorter period, and you want liquidity. You want to be able to take that money out anytime you want. So the most popular form of savings in Sri Lanka is to save in banks, right? So that explains why most of the savings are in bank deposits, where you get a very low return, but you have the convenience of being able to pull out your money anytime you want. But understandably, people don't want to put all their savings in a bank because of that first question that you posed, where if interest rates are higher, are lower than inflation, and then you have negative real rates of return. So you want to also look at investing in alternative forms of options. So you can invest in the stock market. You can invest in unit trusts. You can invest in land. So there are many ways in which you can invest where you can realize those returns and probably make a greater return. But the liquidity may be a bit of a challenge. So that is really the distinction between investment and savings. Savings is about keeping your money ultimately for a rainy day where it's accessible to you. You can take that money out anytime you want. You're comfortable even with a slightly lower return. But investment is about making a decision to put some money into alternate forms of stocks, bonds, land, condominiums, unit trusts, etc., to generate a bigger return over a longer duration. Right? So that's really, just to give a flavor to the question that you asked.
Sure. Thank you, Mr. Rodrigo. I think you made a very good start. So since we discussed about actually two different aspects, which is the personal finance, and on one hand, on other hand, we are trying to relate it with the economy. So next question, obviously I had to turn it to Mr. Shiran Fernando. Mr. Fernando, could you just brief us what is an economy in very layman term, right? And as investors and citizens, why Sri Lankans should be mindful of recent economic developments?
Thanks, Asita. Hope I'm audible. Thank you very much for inviting me, and I think it's a great initiative by the Lions to take on financial literacy, get everyone more educated, and continuing this dialogue as well. So that's the interesting question on what is economy. I think we sort of almost interchangeably use it just to understand, how business is, or how even your personal finances. But economy is kind of like I would say an interaction of different players. So you have at one side you have the household, which is families, you and I, who generally end up being consumers. And then you have the producers, people, the firms, corporates, industrialists who put out products and services. So all of these kind of interact in a marketplace where from the producer, from the person who's exporting or importing these goods and services, make it to the consumers, to the household. And in this interaction, trading, all these things happen, and then that kind of captures I would say the economy. So it's just basically this ecosystem, and as an economy develops, obviously there are things like international trade, international finance, things like that which take place. Why is it really important to understand, I think, of recent economic developments? Because usually economy, this marketplace, or this has really been driven by sentiment. I mean, a lot of the time we think, or at least the textbooks tell us, things are run by fundamentals. How a company is run on is how the balance sheet is doing. But most of the time, the market and basically people's ability or thinking is driven a lot of the time by sentiment. And sentiment is kind of how are people feeling about the economy. And really, I think looking at and keeping abreast with kind of the economic development is one part of it. And the news or social media, all those kind of give flavor of it. So if I was, I mean, I think you mentioned in brief kind of where things are. And if you look at the economy right now, it's in a very challenging kind of situation. We, I think, have successfully, refinanced a big international sovereign bond. So one big hurdle this year kind of has been overcome, and I think a lot of sentiment, especially in the forex market, the foreign exchange market, which maybe we can get into, has kind of been eased as well. But there are more obstacles coming up in the next few years, and that's where kind of certain developments need to take place. And of course, then sentiment is also driven by how people feel about growth. will agriculture continue to have yield good seasons during the Maha and the Yala season? Will we see as much exports from apparel and from the other sectors as we normally do? And of course, on the services side, clearly, tourism has been one which we've not really seen in the last 2 years coming into fruition. Can that really bounce back? So all that developments really will give indication to growth. And some of these are captured. I think some of these sentiments are captured in confidence indicators. There are quite a few even put out by the central bank, things even like the Purchasing Managers Index, which kind of looks at sentiment from industry and services. There are other confidence indicators. So all of those are really important because while fundamentals are important, sentiment also does drive things. And just to tie it into your question, I think that's kind of why it's always good to understand what's going on in the economy, because sometimes businesses or even us as households trying to make decisions, decisions related to our investment or our savings, we kind of maybe are driven by certain news and things like that, but we don't really understand what that means. So I think that is very crucial because sometimes your investment decision or your savings decision has consequences for 3, 4, 5, even 10 to 20 years, for example, if you were to go for something like a housing loan as well. So let me just wrap it up at this point. You're on mute.
Sorry about it. So thank you very much, Mr. Fernando. So it was a perfect open remarks in terms of economy and how it will impact the personal finances. So I would like to post a hybrid question to develop or rather build on what Mr. Rodrigo and Mr. Fernando said. I would like to pose this question to Manohari. Manohari, you've been a local market, financial expert for more than 30 years. Now you see a much more broader picture in regional context. So I would like to pick what Mr. Rodrigo said. So he said, when it's come to investment, we can go into various various capital and money market instruments. It can be stocks, it can be bonds, debentures, unit trust. In Sri Lanka, we do have these instruments. So me also being a career banker for 20 years, you being more than a career banker for 30 years. So my question to you is, why Sri Lankan retail investors or the general public are reluctant to diversify their savings into investments?
Right. Thank you very much, Hasita, first of all, for inviting me here and meeting one time back my fellow colleagues from the local market. I would just like to pose a question to the panelists here. How many of you have invested in the stock market, your personal funds?
You have one here. Maybe not directly, but through unit trust.
Okay, so Dilshan has. Shiran has not raised his hand, neither has Mrs. Fernando. So I have not invested in the stock market either, right? So this is a very biased universe that we have here in the panelists. And you see there itself, it's only 50%. I think that's kind of self-explanatory as far as I'm concerned. But see, from a personal perspective, I'm a very risk-averse person where my personal money is concerned. So I'm not a very good example. But I find that many people don't trust the stock market. And this is my personal opinion. Now, why is that? I think it is a whole host of dynamics out there. We have had a lot of controversial discussions about this subject in our country, about why the stock market dynamics are what they are today, why the EPF is not investing in the stock market. All these questions are deliberated again and again. And every time we have this discussion, everybody's like the general public. And here we are talking about the general public's opinion is we don't want to invest our money in the stock market. So I think trust and confidence clarity and transparency is important. I think we all have studied about stock markets in our various jobs, job roles, as well as in our educational programs, whatever. We all know about asymmetry of information, and we all know about insider trading. So for a retail investor, and here I mean not the retail investor who is very savvy, but a retail investor who would like to enter the stock market and like to make money, like your example, like Dilshan's example at Untitled. You basically get lucky. I mean, that's the general perception. I got lucky in the stock market. If the stock market is functioning perfectly, you can't get lucky. You just make educated decisions about it. You do a scientific analysis, you do balance sheet analysis, you study the companies, you study the issuers. But if you do that in Sri Lanka, I think it's very difficult. So for me, I would not want to be lucky. I would want to be sure about my money. So this brings a very broad perspective of financial literacy. And I have seen this all over Asia. It's not only confined to Sri Lanka. So we have financial awareness, financial knowledge, skills, attitude. And our attitude is a bit risk averse here. Having said that, I want to tell you that how many people come to me for advice about having invested money in certain informal institutions, informal hybrid instruments that they themselves cannot explain, but which has promised them mega returns. But these are the same people who will not invest in the stock market, because the stock market is in that case safer, because that's an exchange that's regulated. You will get some price. So I think this all points to attitude and education, Asita, as far as I'm concerned. And we have some way to go there. Our financial literacy is way below our what I call the knowledge literacy, which is very high. We have always been high in a South Asian context, and even in a world context, like over 90%, and we are still there, which we should be proud of. But our financial literacy is 35%. Mrs. Fernando is there, and we know the work that central bank, the good work that central bank has been doing on building up financial literacy. But we have some journey to go. And then that's my point of view, my limited point of view.
Thank you very much, Mrs. Gunawardhan. I think you gave us a perfect answer, and also which paved the way to my next question. So as you correctly said, in Sri Lanka, we have seen, to me, in my view, it's like two different extremes. Sometimes, as you correctly said, we have seen an investors who are not willing to basically go and invest in a more of a regulated market, which is, let's say, stocks in terms of, let's say the stock exchange, whereas, they have been choosing an organization which provide exorbitant returns when you do an analysis against the risk and reward, which does not make much sense. So I think that's where the regulator come into the play, because the regulator plays a critical role both in financial sector, in both capital and money markets as well. So I would like to pose this question to our Deputy Governor, who represents the Central Bank of Sri Lanka. What is the role of a regulator as the Central Bank of Sri Lanka in the financial market?
Evening. I hope I'm audible.
Yes, you are audible, okay. Deputy Governor.
Okay. First of all, thank you very much for inviting me. I'm also happy to be associated with this endeavor, because financial literacy is something that we see, despite all efforts taken over several years, we have not been able to achieve the expected outcome. I don't know the reason, because I know we spend quite a lot of money, resources, and time going right around the country and kind of associating with so many other agencies, but still the situations that were explained here are still the same. So therefore, I'm happy to associate and also to give whatever my experiences, share my experiences, at least in a little way, to improve this situation. So you asked me what is our role as the regulator. I think in order to explain that, let me first tell you how we derive this role. It comes from a statutory purpose that is given to the central bank. Central Bank has this objective. We have really twin objectives, but of that, one key objective is the financial system stability in order to secure the productive resources of the country. So in doing that, the central bank is considered as the apex institution in the financial system that will look after the interests of several stakeholders operating in the system. So basically, under the Monetary Law Act, as well as several other laws, central bank regulates several types of financial institutions: the banks, finance companies, the leasing companies, microfinance institutions, and primary dealer companies. So if you take the banks, finance companies, and microfinance, they are basically deposit-taking institutions, and primary dealer companies are getting involved in the government securities, and leasing, of course, is the financial leasing business. So in most of these things, there is this deposit context, and it is the prime role of the central bank to ensure to safeguard the interest of these depositors, because all these institutions are kind of the sources of funds, are the depositors' funds. So therefore, as the topic of this place, the personal finance is the key component of this our regulatory role. So we are really statutorily bound to safeguard this personal finance of individuals. So when we say personal finance, as it was explained, it could be a savings, it could be an investment, but broadly our role is with regard to the savings, that is mainly the deposits. So as regulators, we have been given several tools to carry out our regulatory function. So broadly speaking, first of all, we have introduced several prudential requirements, because we know when we do business, the owners or the managers of the business normally looks after their business because they have to ensure that business continues. But as we know, in all these financial institutions, the funding comes from another source, whereas they are managed and activities carried out by a different group of persons. So therefore, there is kind of a natural tendency, maybe not to be the same level of caring to those managing of the funds. So that is why world over, there are regulators when it comes to financial institutions. So the first tool that we have is this prudential requirements. When it comes to prudential requirements, we impose different requirements. Like we say this amount is the minimum capital. If you are to have
Deputy Governor, I think we lost you for a couple of seconds. I think she is experiencing a signal problem, I believe. Deputy Governor, can we hear us? Yeah, Deputy Governor, could you please unmute yourself? I think we lost you for a couple of about 10 seconds.
Can you hear me?
Yes, now it's okay. Now you are back. We lost you for about 10 to 15 seconds.
Right, sorry about it. So I think I was talking about the prudential requirements and then came to management. Did you hear that?
Yes.
Yeah, so there is a management and then comes the governance process. So governance is the formal process that the regulator has required to be instilled in an institution. That is, like there are certain manuals, there are certain controls, there are like different approval levels. There is a process for everything, and all those have to be documented. They have to be checked from time to time. These processes have to be reviewed, and there is a kind of a reporting process, monitoring process, following a compliance process like that. Then there's a risk management framework. So like that, different types of prudential requirements. Then we want, under these prudential requirements, periodic reporting. There'll be kind of monthly reporting, quarterly, annually. So that is how the central bank as the regulator will come to know what has been required by the banks or the finance companies to be carried out is happening. So that is being done periodically. Then finally, we also have a supervision. This can happen by continuously reviewing these periodical returns, and also we visit these institutions periodically and have an on-site supervision. So that is the kind of broad process that we do in our regulatory function. So what we try to do is to identify whether there are any kind of triggers, any early warning signs where we'll have to get involved and get some corrective action that is need to take place well in advance before an institution kind of face some difficulty. So this is an ongoing action, but I also want to mention here, central bank regulatory function doesn't mean central bank is guaranteeing the safety of your funds. It is not possible for us to do that. We are not permitted to do that. And we are only providing a facilitating role to ensure that the funds of the depositors and creditors are safeguarded. But having said that, I also want to say that when we do this prudential regulation, we always consult the industry, the banking industry. We always try to see how we facilitate the customers, and it is done in a facilitative way so that it is not hindering the business process also. But of course, sometimes the bankers or customers see these as being a bit restrictive. But that is for genuine reasons for prudential requirements. Because in certain cases, yes, we have to impose limits. We have to say there is a maximum amount that you can lend to a particular customer. If not, you'll have to kind of control. So these are certain prudential limits. But still, in imposing that kind of requirement, we always try to facilitate the requirements of the particular institutions, the country's requirements, the economy's requirements, and also the different variations in the kind of nature of businesses carried out by these institutions.
Thank you very much, Deputy Governor. Yeah, I think you made some valid points. I think again, it's everything nicely touching what Dilshan and Manohari and Shiran was also speaking about. So that technically speaking, so the retail individuals cannot hold the regulator 100% responsible, because as you correctly said, what you supervise is the savings piece, not really the investing piece, because that is done with the various individuals and the counterparts. And also the clients should do their due background check before they investing in various institutions. So, and also they should understand their their individual risk appetite, as Manohari was speaking about. Yeah, so thank you very much, Deputy Governor. So I would like to get into a slightly a technical area, but we would like to make it non-technical. So I would like to hear it from our economist in-house, which is Mr. Shiran Fernando, because day in, day out, we hear, or rather we listen through mainstream media, through social media about the exchange rate, how volatile it has been, how far it has gone up, how how low that has gone down, and the the exchange rate and the inflation and the taxes. So I mean, but simply what we need to understand is, as individuals, as retail investors, how do we connect all these dots? So my question to you is, how these tools that I mentioned, particularly the exchange rate, the interest rate, and the inflation and taxes that affect the individual's personal finances. So you could take about 10 minutes to explain this, because this is a very broader question that I posed to you.
Sure, okay. I don't intend to take about 10 minutes, but I'll try to wrap it up very quickly. So if you look at interest rates, I think this is a common question I get from even family and friends. Is the interest rate going to go up right now? Because all those who are saving, especially those who are retired, are really relying on the savings interest rate to even get their monthly income at a good rate. So for interest rates, it's the borrowing side and also the deposit side. So if you look at from the deposit side, if you look at interest rates as a whole, I think because of COVID, central bank in particular, and in line with a lot of other what has happened globally, has tried to support the recovery, tried to support economic growth by lowering interest rates so that it's more easier for businesses, for even households to kind of have access to capital, refinance loans at a lower rate, and basically to stimulate demand because with interest rates coming much lower, people would consider maybe taking out a new loan or a housing loan or even a vehicle loan and things like that because the cost of capital or how much you need to kind of lock in has reduced. But from a savings point of view, those who kind of had locked in 6-12 month savings, now when they're coming up to kind of renew, they have to renew at a much lower rate. So the usual, I mean, the view I would really give is kind of from a savings point of view, do you need income each month? If so, how much would that really be? If you look at your portfolio of savings, can you break it down maybe 50% into more short term, 50% maybe into more long term, and then if you feel that this low level of interest rates, which has not been there for a long time, and historically Sri Lanka has not seen interest rates at a low level for a long time because it's always it does pick up and then the central bank does move into raising interest rates and the cycle goes upwards. Can you make a call to say whether in 3-6 months my 3-month fixed deposit will be 1% more higher? Can you make that call? So if you feel, for example, that interest rates might go up, then I think it's good to always go into more short-term fixed deposits, 3-6 months in that range. But it really depends on how you structure your savings portfolio, and that's the key consideration. Why you go short is because in 3-6 months, when that instrument comes up for renewal, you can always lock it in at a higher rate. For borrowers, I think these rates, which are quite low historically as well, I think is ideal if you're looking, I think even on the housing side or even for working capital loans for your businesses, for the SMEs, it's an ideal time to borrow as well because of the low capital rate. But if the expectation is now that interest rates are going to be much higher in 3 or 5 years, then you'd rather fix at these interest rates level, go for a fixed capital kind of loan, and maybe in 3-5 years the rate will be much higher. Sometimes you can go for floating, for example, but you run the risk of then when interest rates do go up, that your borrowing rate will kind of go up as well. So interest rates, I think, because of where we are in terms of the economic recovery now with the third wave and the influx of cases, I think central bank might really continue to keep interest rates a bit more lower for a bit more longer because they need to kind of get growth back on track as well. And that's the view that really needs to kind of take place. On the exchange rate side, I think really the pressure has been more sentiment driven in terms of I think the expectation on debt refinancing. Of course, we've seen a bit of import pressure as well because items like fuel, especially with global crude oil prices, recovering even what it was pre-pandemic and going to about $70 a barrel has really put a lot of pressure. And also with the recovery of the economy, we've seen more certain goods, consumer goods, as well as investment goods also picking up. So all those factors have really had a bit of pressure on the currency. So the key factors to really watch out for that is what's kind of the debt reschedule for Sri Lanka, what is there the dollar liquidity side of it. I think right now there is a bit of pressure on that, but maybe that will be near term and that will ease out as some of the inflows that central bank has been talking about, like the IMF overall SDR allocation increase globally, some of the swaps, a lot of those inflows coming in. Will those kind of ease the pressure on the rupee? Remittances, which has really been strong, close to about 11-12% growth so far this year. That's an additional $300-400 million to the economy as well. So you have to factor in those aspects and then think, okay, will the exchange rate kind of stabilize at these levels? Will we be able to, and what does that mean in terms of imported goods, in terms of even sending dollars overseas for any related transaction or even remittances? And if you feel, for example, the rupee is kind of correctly valued, then you would sort of send the rupee dollars back as well. So that's interest rates and FX. Inflation, I think, is, if you look at it right now, it's slightly ticking up, and that's driven by, I think, a couple of factors. Food prices has been a key driver, and I think that's kind of caused inflation. The Colombo index to be about 5.7%, the national index to be slightly higher, on the upper level of 6%, and that's because in the national index you have a higher weightage towards food. But if you exclude some of these volatile items, including fuel, which has seen a rise in the last few months, the core inflation, what we call, what we look at in terms of what is the underlying inflation rate, which is core inflation, where you strip away some of these volatile items, has been around 4% level. So it's still not too worrying. And I think what you need to see is whether the current upward tick in inflation, is it more temporary, or is it going to be a bit more long lasting? And I think even globally, what a lot of countries are seeing is a pickup in inflation, but a lot of the expectation is that it's temporary because of economies bouncing back. And of course, taxes. I think that has been the fiscal side of it has been a key aspect. Fiscal meaning for the government, because that's how the government functions. They raise taxes either through income taxes, corporate taxes, for the consumer, things like VAT, and then now certain taxes like, for example, NBT have been removed. So for the consumer, VAT, for example, now has gone from about 15% a couple of years ago to now about 8%. So some of those have really come down. And personal income taxes also has thresholds have gone up in the last 5 years from where you can be taxed as well. So the movement of those really, I think, from what you can spend, from what you get as disposable income, will really matter. And that's an area to really look at, especially when the budgets are announced, the national budget, which usually comes out in November, to see if there is any changes to that. So that's something I think the audience, and as you plan out your personal finance, that's something to really look at, to see whether some of those rates have changed. And I think right now with in the current fiscal year, I think revenue is quite crucial. So it'll be interesting to see which way the government and the treasury will really look at in terms of collecting taxes as well. So in short, I think that's kind of how all of it interacts. There is a link between interest rates and exchange rate as well, and that's the dynamic that the regulator and the central bank really is always faced with in managing both, while keeping also capital controls and things like that. So it's called almost the impossible trinity, where you really have to maintain interest rates, you have to maintain exchange rates, and also how do you manage your capital inflow and outflow as well. It's difficult always to maintain all three, and I think right now it's a trying situation for at least two of those areas.
Right. Thank you very much, Shiran, for that very descriptive answer. So let's go for a quick commercial break. And so during the commercial break, you are permitted to post your question. So we have dedicated Q&A person have been established. So you can post your question so that I can take those questions during the Q&A session. So we have our partner, our knowledge partner, CIMA. So we have a special message from them. Tarindu, over to you.
Right. Thank you very much, Asita. And a very good evening to everyone. And thank you very much for connecting with us on this evening. During your break time, I'd like to take about good 5 minutes to run through an element of interest in terms of how working professionals can steer their learning element as far as the CIMA qualification is concerned. Some of you all would have already taken your studies. Some of you all aspire to become a CIMA qualified member. So let me take about 5 minutes to run through my introduction. Right, I suppose you could see the screen.
Yes, we can see the screen.
Perfect. Thank you very much, Asita. All right, so how can we as CIMA help you achieve resilience and growth? Basically, by making sure that you stay ahead of the game. I mean, what you need to consider at this point is it the right time for me to invest on developing the skills relevant to take on the next challenge in my career? So what I show you on to your right is certain deciding factors to decide what's best for you at this point of time. If you are looking at a learning element, if it is a little bit of a downtime for you, or if you have some time to sit back and then consider in terms of investing on your studies, the time it takes and the skills that are relevant for you to take on that next challenge, and what would be the financial commitment, and will I be able to take that on? So those are things that you need to look at when you decide this. And then of course, in terms of that learning solution, does it teaches me the skills that are highly recommended? And does it give me flexible learning and allows me to be agile in my career aspirations? That is something you need to think of, and a certification that is recognized by the employers. Now, if you do look into the chat window at this point, you would also see a note from CIMA, where if you are interested in knowing more information about the paths that I'm going to describe to you, just feel free to click on that link and include the details so that we can get in touch with you. So this is the CIMA qualification, and then where we got 4 levels to complete. And of course, we do not expect working professionals like you to take on the full qualification, because there are entry points that will be very lucrative for you to decide on how you should focus your studies. Now, what I need to show you here is by taking a quick look at you as to who you are. Now, you could be a C-suite professional with over 15 years of experience, a chartered accountant, a senior manager, a middle manager, or maybe a senior executive, or has a business degree or master's degree with over 3 years of experience. So we can divide you into these 5 quadrants and then take you on board to the qualification, because this is something that we have testing out. We have been testing out for the last 5 years, where we do give in an opportunity with your work experience being assessed. Now, if you take the entire qualification, you got 16 exams to complete, and we do open entry points at each case study: operational case study, management case study, and the strategic case study, right? And I'm not going to go into detail beyond that, but I'll just give you an insight. Let's say if you're looking at the very first one, the strategic case study here, where it gives you an entry point to the final case study of CIMA. If you are a C-suite professional, a CEO, a CFO, a director, a senior manager, minimum of 5 years in the strategic level, and overall 15 years of experience, you could come on board. And then if you're a CS Sri Lanka member with over 6 years of experience, that opportunity will also be there for you. And then we have another pathway called this, or rather, this will give you an insight how that work. You get direct entry to the final case study of CIMA. And these are some familiar names in the industry that you also may have heard of, have gone through the journey and have become CIMA members. And then these are people who have completed the exams and are waiting for their CIMA membership. Okay. And then you have another entry point at a tier down, which is the management case study entry for senior managers with over 10+ years of experience, and also for middle managers over 6 years of experience. Now, in which case you would be exempted from the first 3 levels of CIMA, having to start from the management case study. And then, of course, the strategic level 3 areas also would be exempted, having to complete the strategic case study. So we are looking at a 2 case study structure for them, right? So I'm not going to go into detail, but let's have this conversation ongoing after this session through the registration link, and we'll pass on the message to you, okay? All right, and then we have another one called Finance Leadership Program, which necessarily gives you a 360 understanding of a finance function through an interactive learning platform. We used to call it a learning management system that gives you the entire CIMA curriculum where you could interact online and plan yourself to complete within a span of 1 year to 2 years time. Okay, so whereas if you are necessarily coming on board with very minimum years of experience, say about 3 or 4, and have done maybe your first degree or your second degree, we should be able to take you on board through this online learning management portal that accommodates you to complete the 3 case studies, operational, management, and strategic level. Okay, so I don't want to go beyond this and take you through the entire qualification once again, but this is a quick insight as to how this finance leadership program works. You get your certificate level exempted, and then you do take yourself through the entire learning journey of CIMA operational, management, and strategic level through this online learning platform and focus on your case studies. So for the moment, what I want you to do is to enter your details on the link that you see on the chat window. And beyond that, you can take a quick screenshot of what you see on the screen right now and do connect with the CIMA Sri Lanka consultants. And we are more than happy to assist you in terms of deciding what's best for you in your learning journey. So thank you very much, Asita and the team. I'll sign off from here. Thank you.
Thank you very much, Tarindu.
ඔබ තුල සිටිනා මා තුල සිටිනා රට රකින්න විරුවා සටන් දිමට වඩනා දැන් ඒ මොහොත තමා දැන් ඒ මොහොත තමා දෙමාපියන් අප දූ දරුවන් අප සතු ඉහළම දනයවුන් අපි රැකුණොත් මුළු රටම රැකේ මේ වීරත්වය පානා මොහොතයි நீயும் நானும் வீரனே இது நாட்டை மீட்கும் வேளையே சகலரையும் காத்திடலாம் நம்மை நாம் காத்தால் இதுவே அத்தருணம்
අපි රැකුණොත් රටත් රැකේ අපි රට වෙනුවෙන් අපේ කොටස හරියටම ඉටු කරමු AIA Insurance.
That's a message from our insurance partner, AIA. So let's get back to the second session of the forum. So I would like to pose this question to Mrs. Manohari Gunawardena, because you cover a range of countries in Asian continent, and also you were particularly speaking about the book literacy being at 90% and the financial literacy being at 35% in the country, in Sri Lanka. So in your view, any regional best practices or examples, especially from the emerging economies, how a higher financial literacy and also the improved risk appetite of the citizen led to enhancement of the personal disposable income?
Thank you, Asita, for that question. I think that's a very pertinent question to ask. As far as Sri Lanka is concerned, I think we are more or less the same or a little ahead of the South Asian counterparts. But of course, we are behind our East Asian and Southeast Asian counterparts. So in terms of best practice, I think it all stems from including financial awareness in the school curriculum. It is something that you have to basically grow up with as an essential skill that you need to be armed with. So in that context, I have seen countries like India. See, if you look at the numbers, India is behind us. Obviously, they have a huge population and the metrics don't really tell the true story. But if you look at the vast amount of people who are investing in instruments other than the banking market, looking at people like farmers, people who are like doing very work in the informal sector, I think we are a little behind in that. Now, despite the as I said, the very good work, excellent work done by the central bank. And I think with my employee also, we have partnered with the central bank on some of these events. The message has really not spread like Mrs. Fernando has said. So I believe that in the school curriculum, it is something that should be included from a very young age. And I can tell you that when I was working for a bank in Sri Lanka, and we were involved with like designing various marketing campaigns for deposit products, we found that the information that banks give out are interpreted quite differently by the depositors. See, there's a common myth that central bank will pay you back if the bank fails. Nothing is further from the truth. Your money is your responsibility. So how do you get the responsibility for your money? That means you have to know how to manage your money, and that comes only through education, and that needs to be institutionalized. We are very science and mathematics oriented in our curriculum, and we are quite good performers at that also. But in terms of finance, even people who are in the esteemed professions may have low financial literacy. So for one, what I have seen is good business schools are a must, and that is there already in our country, but school curriculum need to be updated. And secondly, I think it's not very prevalent in our country for us to, let's say, lobby against financial malpractice or fraudulent activities in an organized fashion. So many things go unnoticed, and most of the time small print is not read from even financial institutions, even from banks. So many customers don't know that bank statement is a very sort of a legal document, and whether it is electronic or whether it is in print, it is something that you have to read. It is something that you have to get back to the bank on if you don't agree, because that's a document that the bank communicates with you. But many people don't do that. And it's one thing is lethargy, and one thing is perhaps a lack of knowledge, because the important information may be hidden down there. So for me, it is education and awareness building. And I think my perspective is we are going to get there, because there's a lot of work done by organizations like yourselves, the Lions Society and the Central Bank, as well as some other non-governmental organizations. And I think even if you take the chambers where Shiran is representing the chamber, a lot of work is done even with the business community. So it's a journey, and it's going to get there. That's where how other people have also got there. You have to institutionalize this. Thank you.
Thank you very much, Mr. Gunadhana, for that answer. So I would like to pose this question to Deputy Governor. Again, I would like to start from where Mr. Gunadhana has actually left. So she was actually, I particularly would like to pick the term of rather statement that she made. Your money is your responsibility, not the central bank's responsibility. So I know it's like a fine thin line where wherever the during my last 20 years I have seen many financial institutions failed, and where lots of depositors with financial literacy, without financial literacy, both actually lost quite a significant amount of money. I understand you briefly touched on this particular piece, Deputy Governor, but I would like to hear it from you in a more systematic, rather more in more sequence order for a retail, for the benefit of the retail investor or the general citizen. What action that the central bank has been taken in order to maintain the financial system stability? That part already part. And what are the responsibilities of the consumer or the general public needs to consider before associating any financial instrument and institution?
Okay. I think already some brief information has been already given by the other panelists, but in order to conclude that, make it more complete, I would say, I think first requirement is always deal with authorized institutions. That is important. See, when you enter into a premises to conduct some financial transaction, whether that is an authorized institution. Because if that is not met, whatever you do, and if you are going to lose something, it is difficult for you even to go and make your representation. So that is the first thing. Then I think by all means, I think now what everyone now, since this is personal finance, what we are trying to do is safeguard our own personal, whatever the finances that we have. So I think as a matter of practice, we should get into this habit of savings. Whatever the income we have, at least a little savings should get built up over a period. So that even at this some time of difficulty, that savings are there to help us. So in building up the savings, it is important to select the places where you would get a good return and also a kind of you can safeguard your money. So to do that, again, go through the kind of different institutions. There are banks, there are finance companies, there are microfinance companies. So here some basic principles are high risk is with high return. And also there is this principle which says don't put all your eggs in one basket. In other words, the diversification. I think these two are very simple two principles that anyone could understand and follow. So just don't go behind that 0.5% interest or some small gift that you are going to get. Withdraw your money from a bank like that has maybe 100% guarantee, government guarantee. We have banks like that. Then there are other banks that are very strong and sound. Don't go for that small bit of 5%, 0.5% or that small gift and lose sometimes your other savings. So you have to kind of strike a balance. Are you going to kind of go only behind your return and then lose the money? Then among these institutions, now I said when I spoke about our regulatory aspect, there are certain information that we require the banks to provide to the general public, like on a quarterly basis. On an annual basis, there are some information. So please inculcate your learning habits to try and understand these things. Because as I said, there are prudential requirements. For example, the non-performing loan ratio, what it means, that out of 100 rupees, how much the bank has not been able to recover. So if a bank is unable to recover most of it, the money that it has lent, that means it is not going to be possible for them to pay you maybe the interest, and maybe when you want your money back, that deposit. So if it is a very high rate, for example, now currently in the banking sector, it's about 5%, maybe a little higher because we are having some debt moratoriums this time, the real rate. But if there is a bank that is with a 50%, 55% NPL ratio, even if they offer you a very higher interest rate, you have to be mindful. If you are ready to take that risk, do take it, but otherwise, as was mentioned, don't come back to the central bank or to the government and ask for your money. So these are not big things to learn. And I have come across many people who are very well knowledgeable about these things, go losing their money. They put their money in many unauthorized institutions because they have been promised certain higher returns. Then after that, they have already kind of burned their fingers. Then and among the banks and finance companies also, they go to the worst bank or the worst finance company because it has offered them a higher return. So like that, we have to kind of strike this balance. Yes, there are different types of institutions. Central bank is there to look after those kind of the interest of the depositors. We will try our best to kind of maintain that safety and soundness of these institutions, but you have to be mindful of your roles and responsibilities because it is your money. I am not telling we are not going to kind of safeguard your money, but we alone can't do that because it is a collective kind of effort that has to happen. Because if you are cautious in that manner, these institutions will also take note of that, and by your own action, they also get things corrected. Then on the other side, now when you enter into a loan transaction, as was mentioned, please do read and understand what is there. Now, we have already issued some directions on consumer protection, which says a banker should, first of all, make the customer understand what is their offering. If there are several products, first give the customer to understand them, to see which product really suits, because as I said, sometimes you need your money maybe in 3 months. Sometimes you can invest in a long-term product. Sometimes you are not that much interested in that higher return. So like that, there are different products. So you have to understand them and then read those small type letters that they are, and there are conditions given in those. So understand them and do your business. Never sign on blank documents. You sign on blank documents, you don't read them, and once something goes wrong, you write to the central bank. Please don't do that. Then also always be mindful. After you deposit your money, after you put your deposit, just don't think it is a bank, central bank is there, government is there. So you also have to be vigilant about it. What are the changes happening? What are the changes happening in the economy? How will it affect your money in the bank? And like that. And also very important, don't kind of react also. Sometimes we tend to react unnecessarily, and also that triggers certain confusions. Now, I think in the past few days, there were some negative remarks on our financial industry, but what I feel is that is not warranting at this moment, because all actions are being taken to kind of take whatever possible measures to address these difficult situations currently that the country is going through. Not only us, even many other countries are going through such situations. So if we panic, and also if we kind of try to take unwarranted actions at this time, that itself can trigger difficult situations for this financial industry. Because even the very well run industry, run company or a bank, and the strongest bank, if all customers come and ask for their money, you can't manage that. So we have to be mindful. The trust is very important. Have confidence in your institution. If you're not feeling very, make yourself, like, do your research, be kind of knowledgeable about what's happening, and follow those kind of very basic principles of not having all your eggs maybe in one basket. And also I want to say, with regard to deposit taking institutions, banks, finance companies, currently there is this deposit insurance scheme. So with regard to the deposits that you are having in these institutions, we have 1.1 million per depositor per institution, a deposit insurance. So any money that is there up to 1.1 million is, in the case of any cancellation or suspension of an institution, will be paid to the investor. So these are few kind of things that I would bring to your knowledge. Of course, these are very long subject. We can talk to long time, but I think that's suffice for the moment. Thank you.
Thank you, Deputy Governor. I think that was very, very insightful. I think you cleared lots of doubt. I mean, in terms of responsibility. I mean, before placing the money. So a couple of key takeaways would be you emphasize the importance of diversifying risk without instead of putting all your eggs into one basket, putting into different basket, and also the importance of reading the fine print, and also to see before getting into any agreements to read and understand what's exactly the financial institution or the bank is trying to communicate. And also the deposit insurance that they have of 1.1 million in the event of a liquidation of the financial institution. So those are some of the, I think, good insights for the audience. So I'd like to build on again the Deputy Governor said. Ms. Rodrigo, I'd like to pose this question to you. You represent the largest the commercial bank in the country. Based on the various publication in as the World Bank, and perhaps I have seen some of the ADB publications as well. So as a nation, what we have seen is we have an aging population. So by 2040, over 5.2 million population, that means approximately about 25% of the Sri Lankan population will be 60 years. But still, the dialogue about the retirement planning, estate planning, and healthcare remain bleak. So could you just highlight, why citizens or other retail investors should pay critical attention on the previous topics that I discussed, and the role of a bank to address these matters? Specifically, I'm asking about the retirement planning, since we have the aging population and estate planning. Mr. Rodrigo, over to you.
Thank you for that question, Asita. I think it's a very relevant question, and it's a relevant question not only in Sri Lanka, it's for many parts of the world, because in many parts of the world, as you said, aging of the population is being experienced. So what I need to tell you is that many companies, many banks, insurance companies offer pension and investment plans. There are private pension plans available. There are medical healthcare plans available. The earlier you avail of these, the better the benefits. So, I mean, as a case in point, if you are below 45 years old, you can get a 1 million health plan, which will cost you maybe 10 to 20% below if you're taking that plan over 45. Of course, there are restrictions where the pension as well as the pension is, of course, for life. But the medical healthcare plans that are offered by insurance companies won't protect you after 70. But even the public sector through the Agrahara scheme also have medical plans for retiring staff. So I think, the key message there is to, invest wisely, plan ahead early. So if you start thinking about it early in your life, it's something that you can start investing in a private healthcare plan, private pension plan. There are many insurance companies, many banks that offer this. There is also targeted investment plans also that are available. So as a country today, we have a GDP of about $4,000, which translates to something like 70,000 rupees a month. If if an average person can manage to save 20 to 25,000 rupees a month, right, in about 3 years, 4 years, they'll be able to save $1 million, and over a period of time, even build their own saving space to support them during their retirements, over and above all the plans that are available right now. So that personal discipline, as the Deputy Governor mentioned, matters a lot. I hate to say this, but I sit on an insurance board, and one of the challenges that we faced when we were doing insurance plan for our microfinance portfolio is that by and large the microfinance portfolio is among rural women, right? And most of the women in the rural households, they do their own little cottage industries, and we had a plan where there was a medical insurance that was offered to the spouse as well as the lady who takes the plan. And what we realized was that the death rate was much, much higher among the spouses because of alcohol, drug consumption, informal forms of alcohol being consumed, depression, etc. That made the policy not very viable. So these are some of the challenges that we had in this case. So I think the key takeaway here is that you need to plan early. The products are there. Of course, the issue with regard to real earnings, right? Interest rates versus inflation, and what you save for today, the time value of money in the future might be less. And again, as the Deputy Governor mentioned, the importance of investing in a basket of products. And even the planning for the future, your retirement, post-retirement also needs to come through in a combination of different products. So if you have some savings, not only do you invest in a retirement planning, a premium every month, but you also look at investing in some land, you invest in the stock market. There was this discussion that happened with Manohari, where she mentioned about the stock market and the opportunities that lie in there. Obviously, there are certain stocks that are not very palatable right now, but there are also very, very attractive stocks at any time, given the situation in the country. So companies in assembly, manufacturing, in healthcare, exports, there are very good pickings. As you know, most of stocks are at P ratios below 5 at the moment. So the opportunities for upturn, if you selectively pick, is high. So the important thing is, even when it comes to retirement planning, health planning, you need to start researching early and start making those investments early. Otherwise, what happens is most people start thinking about it when they are 55 years old or 60 years or 65. At that time, it's extremely prohibitive. And the cost is, it doesn't make sense for you to invest in at that time of because the returns are not commensurate with the investment at that time. So you have to plan these things early. The instruments are there, and then engage with these companies in terms of your planning your post life, assuming that you are going to live at least, the people's lifespans are increasing, and you need to really make allowance for that and start thinking through that process in a very disciplined way.
Right, Mr. Rodrigo, thank you very much for that. So I think you made a very valid point. I mean, why the retail investors should pay critical attention in terms of saving their money and making a prudent investment, especially when they are heading towards their 60s. So thank you very much for that. So I think with that we can wind up the formal session, and we can quickly go to the Q&A session. So we got actually. Sorry, before we start the Q&A, we'll give you the answers for the two questions that we posed. Shiran, would you like to give an answer to the first question? Would you like, or with a brief explanation?
No, Asri, go ahead. I can't seem to find the first question.
Okay, that's fine.
Yeah,
that's fine. So that's fine. So firstly, let me apologize for the technical glitch, that technical problem that we had during the question number 2. So some of you were not able to answer to that question. So the first question what we asked was, anyway, I will not read out the entire question. So in simple terms, what we asked was, your interest rate in your savings account is 4% and the inflation at 6% after 1 year's time. How much of worth of goods and services that you'll be able to consume. So if you go by the typical classical economic theory, technically the answer should be C. I think 84% of you gave that answer. So you will be able to buy less than what you can buy today, because the value of money has dropped because of the higher inflation. So the second question what we asked was, if the rupees, again in very essence, if the rupee is expected to depreciate by 3 rupees, if you are a person who's relying on imports, what you would be doing. Again, we had a very diverse set of answers. So again, I would like to mention that there are no right or wrong answers. There are other different various factors that would affect this decision, the cash flows, the other interest rate environment. So you should not take it as the blueprint sort of example. But if you go by the standard basic principles, if the rupee is expected to depreciate, it makes sense to take some additional stocks, because your cost of the production or cost of production will be lower, because rather than paying example 195 rather than paying 200 rupees after 3 months, it makes sense to pay 192 rupees now and get your stocks right now, so that the cost will be less. Right, again, I reiterate that you should not take decisions based on this. You should do your own judgment. So the question what we have is, again, I will make it very open question to all 4 panelists. So you could pick and choose the answer. With the current bank interest rates, when opening fixed deposit, is it advisable to open for short-term period like 6 months, or long period like 1 to 2 years? What is the most likely future prediction of the interest rates?
Shall I take that?
Yeah,
Hasita?
of course.
So, to a large extent, that question was answered already by Shiran. He mentioned that, given that interest rates are likely to go up in the short to medium term, it's best to lock in short rather than lock in long at this point in time.
All right. Thank you very much. So actually, there's one question. The role of employee provident fund that has 2.8 trillion assets. does the general public fully aware of the pre-retirement and the post-retirement benefit it offers? Probably Deputy Governor could take that question.
Yes, now this Provident Fund, as you said, is a retirement benefit that has been statutorily set up for especially for the private sector. So as it was set up originally, there has not been any pre-retirement benefits. It was only intended as a post-retirement benefit. Once you retire, for you to get this fixed amount and then make use of that for your post-retirement. But somewhere in, I think, 1998, there were some amendments and certain pre-retirement benefits have now been introduced. So based on the kind of the balance that you have in your EPF account, the individuals now can get a housing loan. There is a possibility if you have kind of maybe 75% up to the 75% of that balance, and if you have like 50, it's for a 15-year repayment period. There are few banks like People's Bank, Bank of Ceylon, HDFC, Housing Development and Finance Corporation, then State Mortgage and Investment Bank, and also the corporate rural banks. They give these loans, housing loans. But here I would want to give you a small cautious advice. Now, there is a tendency when you get this housing loan, you think this is given against your EPF balance, and people do not pay the monthly payment, the installment. But remember, what happens is when you don't pay your monthly installment, at every end of every calendar year, your bank gets money from your account from the EPF together with the penal interest. So unknowingly, you are kind of reducing your post-retirement benefit that is available to you by kind of resorting to that. So try your best when you if you get this housing loan to service your monthly interest, so that you also have your employment post-employment benefit once you retire from it. Then also there is a possibility to withdraw 30% of that fund. This was kind of introduced in 2012. If there is at least 300,000 balance in the account, then at least you have contributed continuously for 10 years. And currently also you are a contributing member, then you can also resort to that. Otherwise, you have to wait till, like if they are ladies, till 50 years, and also for gents, 55 years, then you can kind of obtain the entire sum that is there in your account. Here again, I want to remind now, when we kind of talk to many of the depositors that sometimes have lost their money, they have lost this EPF money that they have invested in certain maybe unauthorized institutions, or maybe sometimes, of course, in some finance companies also. Quite lately it has happened now. So therefore, be careful now. All what we have said about investing money and safeguarding your money is applicable. And one other thing is about these pyramid schemes. There are some schemes that are coming like pyramid schemes, which are also kind of in a very big way being promoted in the guise of different products and all that. So please don't get caught to them. They are also not kind of authorized things, and anybody getting involved even in that product, not only those who are organizing and promoting, but a person getting involved can also be found fault under the law. Sorry for that additional information, but I thought that is also important.
Thank you very much, Deputy Governor. So with that answer, I think we can wind up the panel discussion and the Q&A session. So just to give you a very brief synopsis of what we have been discussing. So personal financial really matters, because that's what you will be, what the personal your ability to save, ability to invest, relying upon. And so in light of that, it's important to diversify your risk into different asset classes, rather than limiting it to one particular institution or asset class. It makes sense to, based on risk appetite, diversify your portfolio to optimize your return. And also, as the panelists correctly reiterated, so we should understand the risk before we jump. We should measure the depth. Otherwise, we would know what sort of a market or what sort of instrument that we are getting into. And as the regulator viewpoint, as she correctly mentioned, So it's not only the regulator's responsibility to bail out the individual retail investors if they have gone and invest in not prudently managed institutions. So we always do our checks and balances. Even with the established financial institution, always we should look at how they are once it's published, we should always go back and check how these banks or the finance companies or other financial institutions are being managed, governed, and performed. And also it's important that we invest some money, not only the financial instruments, but also to improve our knowledge in terms of financial literacy. As Manohari correctly touched, yes, we have even with the professionals, despite many qualifications, we have seen that in terms of financial literacy, we lag behind. So that's something that we should be mindful and also pay attention to. Yeah, so I think with that note, again, I would like to thank all the panelists and to do the and it's a pleasure to host you for this last one and a half hours. So it's been a pleasure of mine, and we hope to see you again. And thank you very much for joining. So to do the formal vote of thanks, let me invite Lion Dulmi Gunatilaka. She is the Director, Marketing and Communication of Lions Club of Colombo. Dulmi, over to you.
Thank you, Asita. Good evening to everyone. On behalf of the Lions Club of Colombo host, I would like to thank our 4 wonderful panelists this evening for sharing their valuable knowledge and great insights from an array of aspects on the important topic of money matters. Thank you to Mrs. Yvette Fernando, Deputy Governor, Central Bank of Sri Lanka, Mr. Shiran Fernando, Chief Economist, Ceylon Chamber of Commerce, Ms. Manohari Gunawardena, Financial Sector Specialist, Asian Development Bank, Mr. Dilshan Rodrigo, Executive Director and Chief Operating Officer, Hatton National Bank. Thank you very much for enlightening us from a Sri Lankan perspective and coming on board in our attempt to bring about financial literacy in our country. Thank you also to Lion Asita Pinnaduwa, the Lions Club of Colombo host club president, who not only moderated this session, but also pioneered this project. I would also like to express our gratitude to our partners this evening, PR Wire, CIMA, STB Bank, AIA Insurance, and SLT Mobitel. Thank you to also to Sitamar Singh of OS2 Works for handling the logistics of this seminar, and our Lions Club Colombo Host Financial Literacy Project Committee, who worked tirelessly to bring this event to life. Of course, a big, big thank you to all our participants joining us from Zoom and Facebook Live. Thank you for being a part of this program. We hope you found the webinar useful and helped you to enhance your knowledge in handling your finances better. So with that, I will leave you to a good evening. Keep safe, keep well, and we hope to see you at our next Money Matters program. Thank you and good night.
Thank you. Good night.
Thank you.
We are always preparing to protect our loved ones. Not always for what will happen, but for what could happen. With a life insurance cover that grows every year, you ensure that whatever comes your way, your loved ones are always protected. Introducing AIA Super Protector, the life insurance that helps you prepare to put your loved ones first. AIA Insurance.
Morning, Masa.
Morning, Sana. Komo tatte.
UPay app එක නිසා වැඩ එකක් ක්‍රීම් බනිස් වගේ නැගලා යනවා. ගිලන.
Right. Morning.
ආයිබෝන් සර්.
ආයිබෝන්. බොමු තමිලි ගෙඩිය.
බොමු.
හැම වෙලාවෙම මාරු සල්ලි අත ගන්න ඕනේ නෑ මාමේ. ස්මාර්ට් ෆෝන් එකකට අන්න අර වගේ ලංකා QR සපෝට් කරන UPay app එක දාගෙන ඒකෙන් ගනුදෙනු කරන්න.
ඕක පුරුද්දකට තියාගත්තාම වැඩෙත් ලේසි අපිත් ආරක්ෂිතයි.
ආර්සියත්තය අයෝ මිස් මාරුසල්ලි නැද්ද?
ෆෝන් එකේ apps එකක් තිබුණත් වැඩක් නෑ. ලංකා QR කෝඩ් එක සපෝට් කරන UPay app එක නැත්තම්. කීයද බුදුලාලි ගාන?
835.
මැසේජ් එකේ.
හරි මත් සල්ලි ආව.
දෙන්න මිස් සල්ලි.
ආනෝනා.
මම UPay app එකෙන් pay කරන්න.
හරි මරු.
Morning. සල්ලි ආවනේ.
හරි මිස් සල්ලි ආව මිස්.
අන්න කෙල්ලෝ.
Bye.
අන්න කෙල්ලෝ.
සානා.
Google Play Store හෝ Apple App Store හරහා UPay app එක නොමිලේ ඩවුන්ලෝඩ් කරගන්න.
CIMA qualification and CGMA designation has provided me with the edge to be successful in securing the current position with my employer.
The CIMA C-Suite program helped me bridge the gap between my existing knowledge with the latest trends in business and finance.
The CGMA designation had opened career doors for me. I got an opportunity thanks to the skills I learned from C-Suite program.
Through the CIMA C-Suite program, I learned how to be more strategic in my thinking at work. This has given me more confidence when making high-level decisions.
The CIMA C-Suite program shaped my critical thinking skills.
What makes a nation great? Is it the richness of its heritage, the beauty of its natural bounty, the state of its state-of-the-art? Or is it the bonds that bind us? For decades, SLT Mobitel has been linking Sri Lankan lives and uniting the nation. Whatever the future may look like, we'll always be right here, connecting you to the things you care most about. SLT Mobitel, the connection.